Hey, it's Brian Parker, the Brian Parker Group. Welcome back to Know Before You Owe. This is one that we get so often, at least every 90 days. So let's go ahead and just get this one out of the way. The Fed cut rates. Are mortgage rates going down? The answer is not likely. Okay. Yes, I know the news and the media, every time that the Fed cuts rates, he's not cutting mortgage interest rates. They're cutting the prime offer rate, okay, which will affect your home equity line, your credit cards, car loans, and everything. But when you hear it on the news, the Fed is raising or the Fed is cutting rates. What's this doing to our home mortgage? And literally on the surface level, nothing, okay, has no direct impact on what will happen with mortgage rates. Now, why is that? Well, they're two different things, okay? Now, the market that mortgage interest rates are tied to is already projecting what the Fed may say in their rate cut, cutting 1/4%, 0.5%, raising 1/4%, raising 0.5%, and what that will do once he or she makes that cut or adjustment. And the market has already factored that into it. Now, the market can react positively or negatively to what the comments may come from the Fed immediately following that rate cut when they have their announcement, and then they sit up and they take questions and all that from various sources and media and et cetera, stuff like that. But there's no direct impact on the mortgage rate. What it does impact is it impacts the 10-year treasury and also the bond market. Okay. Now, mortgage interest rates are specifically tied to bonds. And there's different bond coupons, but that's really irrelevant. But mortgage rates are tied to bonds. And when bonds are going up, that means interest rates are coming down. But if the Fed rate cut or Fed increase on rates impacts to the treasury, where the treasury goes up, interest rates go up. Okay. So when you see that announcement, and I swear, the Fed makes a rate cut, and 30 minutes later, I get a phone call saying, have interest rates dropped? The answer is no. It's already built into the market. And then what the comments may be from the Fed after the rate cut or the rate increase kind of affects that going forward. So it affects us in many ways: home equity lines, credit cards, auto loans, etc. But it may not be an immediate impact positively or negatively on your mortgage interest rate. I'm Brian Parker of the Brian Parker Group. I hope you found this helpful. We'll see you next time on Know Before You Go. God bless you.